our new guest, Scott Bauer of Prosper Trading Academy. Well, I shouldn't say new. You've been around a little bit, but talk to us a little bit about the macro story. Stocks rallying today. Do you believe the bounce?
Not yet, Creedy. I really don't. In my opinion, there are just way too many macro factors happening between interest rates, inflation, obviously what's going on overseas, Russia, Ukraine. So this is a tough environment right now. And I know, earnings season has just started, and that can really set the table for the next quarter. But I'm not buying into this rally just yet.
So what are you waiting for on the earnings front? I mean, what would tell you that this rally might be here to stay?
Well, it's really interesting. Look at Johnson & Johnson this morning, right? Earnings were lower than expected. They actually lowered their guidance, and the stock is up, 6-7%, something like that. So it's all going to come down to guidance for these companies. And I think that the expectations across the board are so low right now that unless we get just absolutely horrendous guidance, okay, that's going to be the determining factor. And I think Netflix is one that really is going to set the table, because that's going to give us an insight, as you guys were just talking about, into what companies are projecting about the consumer moving forward. What about that discretionary spending? And, they may come out with decent earnings, and they may say, well, based on what's going on with inflation, consumers are pulling back, or maybe they're not even going to mention that. And that, to me, is going to be the determining factor of what happens with Netflix and possibly the remainder of this earnings season.
I love that you just married the macro with the micro. Now I'm curious how you actually play that. What are you looking for in earnings with Netflix, but also how do you play it in the options market? Walk us through your trade.
Sure. So I always do everything completely risk defined, meaning I put a trade on. I know what my absolute worst case scenario is. For Netflix, I'm actually bullish for the earnings print because I think much of the negativity is already priced in. So a very inexpensive way to express a bullish position in Netflix for earnings is buying a call butterfly spread. So I'm buying the 380 call that expires this week, selling 2 of the 400 calls, buying the 420 call. I can do that for $1.60-ish or so. That has the possibility of going out to $20 if we get a move up to 400 or so. So this is a very inexpensive way. I do think we are going to see a pop, even though, people will say to me, Scott, what about Netflix the last, 2 or 3 years? We haven't seen the stock go up after earnings. This one might be the outlier.
Well, let's see if you're right. Scott Bauer of Prosper Trading Academy, thank you as always for joining Options Insight today from New York.
Thanks, Creedy.
This is Bloomberg.